What is up, you guys? Q here from Hyperstocks. So today was a pretty eventful day on the market. We have dropped over 200 points to start off the day, and then midday we recovered a little bit, but we can see that on SPY or the S&P 500, we formed a bearish engulfing. Now, there was a way to tell that this drop was going to come, and here are a few things that could have pointed it out. First, we have a negative divergence on the chart. You can see that the RSI is making a lower low while the SPY or the S&P 500 ETF is making a higher high. Therefore, this is automatically a sign that the relative strength of the move up is not as strong as it was back here. So it's something to consider if you have open long positions to perhaps raise your stop losses or begin to take profit. So anytime you see a negative divergence of this strength on a major index like the S&P 500, you want to definitely take note of it. Another reason why we dropped from the 370 high is because of the 370 high. You got to remember that traders are ready to take profit anytime they start noticing weakness in the market. And as the S&P 500 is pushing to all-time highs on vaccine news, but COVID cases keep on increasing, they are going to be very wary at an all-time high position. Therefore, all it took was a little bit of a strong sell in the morning. You can see that we had to start off the day, we had dropped from our highs and broke below the 370 support once again. So anytime a stock breaks over a resistance, which the resistance that we needed to break over was 370, the moment we break back below it, it's not a good sign because it shows that the buyers that took it up did not end up holding the position. Therefore, we saw this massive drop today. It wasn't too bad of a drop. It's not like we experienced a real bad sell-off, but we definitely did pull back significantly enough to have a lot more traders start to take profits on their positions out of panic selling. So not a very terrible position to be in as of today, but we can expect to see further red days only because of the first we have the bearish engulfing. So this candle from today's daily chart is engulfing the previous day's candle, and we can see that selling volume is significantly higher than buying volume has been over the last few days. So we can expect to drop over to the 20-day moving average. Today we managed to make it back up over the 10-day moving average, but we can expect to drop to the 20-day moving average if we can't hold the 10-day moving average tomorrow. So that's going to be right around $362 on SPY, which will typically take the entire market down with it unless you're trading an inverse or one-offs on like the OTC market or something cheaper. Another very eventful thing that happened in the market today, and we're just covering this out of pure entertainment, the GLSI move that went from $5 up to $157 through the day. Now, if you have any experience in trading stocks, you know that these moves do not happen very often. This is a very rare event that if you are able to get in, you are one of the lucky ones, but this is a very rare event to happen on the market. The reason why this stock moved so much is because of a positive report that they actually got on their cancer studies. And a few things to point out about the chart. First of all, how big the move is. I mean, it takes a lot of buying for a stock to make a move of this length or this strength. And the reason why the stock moved this much is because of the float that it has. So if you don't know what float is, here's something to consider. Every stock has a float or the shares allotted to the market that are publicly traded. In GLSI's case, we can see that the float is actually sitting at 1.75 million, which is virtually nothing in comparison to the larger stocks that are out there. So it takes a lot less to move a stock with a low float than it would a stock with a high float, because as demand spikes up and quantity begins to go down, the price will automatically start skyrocketing into sky highs. And it's very similar to perhaps like a Jordan drop, you know, a Michael Jordan shoe dropping, where there's such a limited quantity that people end up buying it and reselling it for such a higher cost. And that's exactly what happened here. We can see that the stock also got halted multiple times on the way up. When a stock gets halted, it means too many orders are coming in and they just need to balance things out on the back end. So they'll halt it for 5 minutes of trading sometimes. And Finally, to end the day, the stock dropped from a high of 160 down to 53. Brings us to a good lesson here. It's very important on the market to realize that when something is too good to be true, it usually is too good to be true. And when you can capture profits on a move of this strength, it's probably a good idea to capture profits and get out before the next guy does, because it can shift down so quickly, way faster than it had gone up. So definitely consider that next time you want to go into a stock, because or a stock that is making such a move, it's something to definitely consider, because the higher that it goes, the more strongly it's going to crash. And we can see more than 50% of GLSI was cut from their highs when they closed today. Anyways, you guys, I hope you enjoyed this video. Pretty short update on the market. You guys have a great day and good luck this week.